Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. The 21st of November, Thursday, 1 p.m. on the East Coast. Guy here, Dan there. Soon to be joined by who, Dan?
Carter Worth.
You missed yesterday, Wednesday. Of course, if it's Wednesday, it's Butters. We dropped a little Butters knowledge on the peeps. And we also teased that little webinar we're going to, is that what they call it, a webinar,
Yeah,
a podcast?
sure,
I mean,
sure.
Yeah,
Webinar.
That's going to be fun. We're going to get that on at 10 a.m. So we'll put that slide up a little bit later. How are you?
I'm doing great, Guy Adami. This is one of those sorts of days where I think you and I were chatting. We were chatting with Amanda, actually,
Sure.
just shortly after the opening. And we're like, wow, that reversal, make that take down the whole market, Guy. We're so, I don't know, the NVIDIA, we thought that was a really important macro event. What was the implied move? 8-9% headed into it. So at one point, we're up 4% after the opening. Then we went down about 3%. And here we are. We're probably unchanged-ish.
Fascinating day. I mean, we were talking, I think, around 10:30, quarter to 11 this morning on the East Coast, and the market had reversed, and we hung up the phone, and off to the races we go. But nobody wants to hear about that. What they do want to see, though, is the rundown, and this is one of our better ones. The no, cross that out. It's like the old Leonard Skinner. Jacob, pull that up. I'll call it up later. One more, 4 from the road. That's what that is reminiscent of. So drag 7 stocks. Amanda's so good. Global stock market chart check. That's great, Carter Braxton Worth. How high will Bitcoin go? How do I know? And we'll do a little audience Q&A, Dan.
Yeah, no doubt. Let's start with this kind of drag 7. And I think it is interesting on a day. And I know, this is not something that I think was unexpected. I think the move is unexpected, that the Department of Justice, FTC, whoever the hell these regulators are, right? They want Google as one remedy for this antitrust case against them to sell off Chrome. You're going to see lots of some of the parts, and there's going to be lots of other sort of, folks out there saying, hey, listen, some of this stuff may not be bad for unlocking value. Let's pull up the Google here for a second, Guy, because at one point this was down 6.5%. It's down about 5.5%. Pretty big move. I think it really speaks to the fact that maybe, folks think that this is just the first part of this remedy process. But when you draw those lines, man, and you put together, I mean, maybe it's not a perfect uptrend, Guy, but we're through that 150, and it looks like we could easily go down, I don't know, to the 1,455 or so. I don't know. What's your thoughts here?
No, it's interesting. So through the 150-day moving average, as you said, I mean, the trend line will continue with time decay to go higher. So it probably gets us about, to your point, 154, 155. And then you take a look and see what happens. I mean, that trend line's been an uptrend since the spring, whether or not you like that trend line or not. I mean, that's what we're looking at here. And quite frankly, if you do look, it has been a series of higher lows since April, which will still be intact even if we trade down to 154, 155. So, this one I think becomes interesting. But to your point, there's headline risk around it. There's been headline risk for quite some time.
Yeah, and I guess the last point we can make on this is that this was also a name that, had been lagging some of the other Mag 7 because of some of the fits and starts that they had with their large language model and how they're kind of integrating Gemini into their products and services. And, you and I got kind of bulled up on the name into the print. It had that gap higher. It got to 184. It kind of hung around there for a little bit. And here you are. I mean, a lot of folks have said, hey, listen, regulatory, massive overhang, but how do you trade it, right? That's the thing that we've heard again and again. And so, to me, I think you probably have to wait. You have to wait and see what the sort of earnings impact or some of these moves. Did the company take their eye off the ball as they start thinking about cleaving off certain divisions that they might have to do? I think it probably takes longer than it's expected. I look at on a valuation, Guy, expected earnings growth next year about 12%, unexpected sales growth of about 11%. We've been pointing this out. The gross margin for this company has gone down considerably, 4 points in the last year from 2023 down to about 63.80 this year, and it's supposed to trend down a little bit next. So it's trading about 18 times next year. Pretty cheap, but maybe it's cheap for a reason.
Well, that's exactly right. I mean, when things are cheap, I'm not comparing Target and Google, but people will look at valuation and say it's cheap. It's got to be a value play. Sometimes things are cheap for a reason. And I think you're finding it here. Microsoft, by the way, is another one that, again, since July hasn't traded particularly well. People, I think the optimists will say we're treading water here. We're sort of building a base for the next leg higher. That could be the case. I mean, the pessimists will say the broader market's been extraordinary. This stock has not participated for the last 4 or 5 months, maybe there's a problem. I think those support lines are probably right. We've been sort of vacillating through the 150-day, both on the upside and the downside. I guess technically the thing that should be concerning is the flatlining of the moving average. And if we continue to trade in this fashion, that flat line will start to turn lower, and then we know what happens from there.
Yeah, I guess the thing that concerns me rather than the technicals here, obviously it has not confirmed any of the new highs in the S&P and the NASDAQ over the last few months or so, but really is the kind of multiple expansion. Our friend Doug Cass over there at Seabreeze has been highlighting this. We've been talking about this for an awful long time. 15% earnings and sales growth next year, trading about 28 times. It seems expensive. For a stock that's kind of stuck in the mud here, I would expect forward earnings estimates to come down a little bit. And, when you think about the underperformance of the stock, it's up about 11% on the year versus a NASDAQ that's up 26% or so. It's kind of telling you that at some point, all of this investment, all of this capacity that they say they're capacity constrained, despite them continuing to build at breakneck sort of fashion, at some point you're going to have a glut of that capacity in their cloud business if the companies, if the customers don't find the use cases, don't have the return on investment. So that's my 2 cents here. Guys, I want to get your thought here. If you look at Amazon, this one down about 2%, it feels like this is the most closely aligned to what might happen in a regulatory sort of environment as the Google. Do you see it that way, especially after that very nice breakout there after earnings? And it looked like it was kind of off to the races, but here you go.
I think that's a conclusion that market participants are making. We talked about the breakout that we saw. It made sense. We thought that the breakout, you'd get probably a back and fill to that prior high that we saw in July. That happened. Now we're in the midst of an overshoot. So maybe we get up to that sort of uptrend line that's been in place since August, those August 5th lows. Longer term chart, I think, will give you a little more indication. This is a static chart. Amanda can put up a longer term chart just for some perspective here. I think just what I think is happening is we're doing a little work at what was prior resistance. Prior resistance becomes theoretically support, and we should hold here. What I want to throw up real quick is that Microsoft chart that illustrates potential for a head and shoulders top. It's going to look very similar to what you did. I think it was ASML a week and a half or so ago. And you can look at it. It looks like that's what's forming here. I think if we sort of take out that support, that head and shoulders will be validated. Then you start talking about a measured move to the downside, Dan.
No doubt about it. I'm going to bring Carter in right now, guys. He's got some great work to share with us. So there he is, Carter Braxton Worth.
Hi, how are you?
Worth charting. Guy, we're going to get to his MSCI all world, global all world, whatever it is, index.
All world country index.
I gotta do that one up. But before we get to that work, and it's pretty brilliant, we're going to hit some crypto stuff too. Carter, I want to pull up this NVIDIA chart. Okay. It's a log chart. And I drew an uptrend channel from the end of 2022 here. And I just want to see, how am I looking here with this thing? Because, when you look at the sort of price action that we've had, this consolidation, if you will, it's been a volatile move over the last kind of 4 or 5 months. We had a 30% peak to trough decline. It looks like it bounced everywhere it should have. And now when you look at this, does this have room to the upside of, I don't know, $190, $200? And I'm not saying I'm turning bullish on this thing or whatever, but I look at that 14-day RSI, it's right there in the middle.
Yeah, I would play for the break. A well-defined trend line, and it's hovering sort of ominously, threatening to undercut the trend line. I suppose what you're saying, could it go all the way back to the top? I'm not sure. But the behavior day to day and week over week and relative to the market is poor, right? And so in that sense, I think buyer beware. Certainly it's one thing to be long and to not add. That seems prudent, to be long and maybe reduce. But just to buy fresh new NVIDIA, increasing exposure to the name, it doesn't seem like the play here.
All right, so I'll throw my 2 cents in real quick. Sorry, Carter, but if it put up instead of the static chart, pull up like a 1-year chart, Amanda, and I could tell you what I think potentially happened today. Back in March, and we talked about this, you had an engulfing pattern to the downside. We suggested that set up NVIDIA to trade significantly lower. It took some time, but it did. If you recall the move, we probably saw, Dan, about a 30, 35% move from peak to trough over that period of time. Subsequent, I think it was June 10th, same engulfing pattern. It was by August 5th that the stock, I think, went from about 142 and change. I think we printed $90. You can do that math. That was a significant move as well. Then obviously off to the races. What we have here today potentially is the same type of setup. So you got to watch this one really closely. Dan, we've already put in a new all-time high today. Check that box. We've traded lower. Check that box. The third box is to see where we close.
Yeah, I guess my only take is that, and this has less to do with the technicals and has more to do with what we heard from the company last night. They didn't really say anything that we hadn't heard over the last few weeks about demand for their next gen, chip, but it wasn't good enough, the guidance and the beat, right? So we've been talking about this and saying, well, when that happens, the stock should find should find sellers and like, and to me, it's basically unchanged on the day, so you had a little volatility in the morning. So I guess my point is like, what is going to be the thing that brings it down? Because they keep talking about demand for this next gen chip that's going to go on for quarters. I know at some point it will stop. I know at some point you'll have a beat and raise that is a little less than what we just had last night. And so the question is, do people start thinking about it on a sequential basis and say, okay, well, the gig is up because we're not going to have this sort of beat and raises that we had that drove the sort of performance from the start of 23 to just about now.
Right. So I'll attempt to answer that quickly before we get on to Carter stuff. So if you go back to March, if you recall, there was really no commentary that suggested you'll see a move. It really was based on the technical formation that we saw, and then obviously the subsequent move into sort of April, May. And the same thing happened back in June. It's not like they said anything necessarily that was different. It was the technical setup that we saw, big volume day engulfing pattern. And nothing's really changed. So I guess what I would say is it's not necessarily what they say, but every once in a while you get these patterns, and we're trying to do a little pattern recognition. So that's what I'm watching today. You have a potential for that. Listen, stock could close at 160 and the whole thing is moot, or it could close at 140. Then we'll have a conversation tomorrow.
Yeah, and Carter, you just mentioned the relative strength to the S&P, to the NASDAQ. Let's pull up the SMH for a second here. We know that this is the largest component. I mean, this thing just doesn't act particularly well. So is that part of the way you're thinking about, taking profits in NVIDIA if you have them? Because the rest of the sector, other than a handful of names, Taiwan Semi, Broadcom, don't trade particularly well.
Right. I mean, that is and so you can look at an equal weight index that depicts this very clearly has rolled over, a bullish to bearish reversal sell NVIDIA. But the point is that after a catalyst has come and gone, what's the catalyst now? Just for between now and 4 p.m.
Well, the catalyst
tomorrow, or between now and next Friday, meaning you've just had, and the stock very muted on its response to earnings. So at a minimum, I would sell calls if I were long. But the point is, it's not a place for new capital day to day, week over week on an intermediate basis. There are other things that are more interesting.
Yeah. And I guess the point that we'll just kind of hit on when we talk about the Bitcoin and some of the related names, I mean, these are, a handful of names that are still, just attracting a great deal of the enthusiasm it relates to the stock market, specifically in technology. Carter, let's look at your MSCI All Country World Index. You highlighted this, I think, about a week ago, and you're reiterating some of the calls here. Walk us through what you're seeing, please.
Yeah, so look, see, it's highly correlated to the S&P. What this captures is about 85% of the global opportunity set within the equity market. And so it's from 24 developed countries, that would be the UK and Germany and France and the US, 23 emerging countries, emerging markets, things like Poland, for instance, or the Philippines and so forth. And this is, the point is, many would say we're going to break out here, and that's a perfectly reasonable bet. But let's put in some other characterizations. That was the 2000 peak there you see, and we know what happened then. You had the 08, 09 bear market. That was the 07 peak. Then we had the 2022 peak. When that sell-off, while it looks muted on this chart, that was a 27% decline in the 2022 bear market, 37% for the NASDAQ 100. And here we are again up against the upper band. The lows are very precise too, to the penny, the financial crisis low and the COVID low. And so again, this kind of thing is very annoying to economists and CFA members, because they don't want to accept that some of these things are very real. So the question is, the bull says it breaks out here. We might have another iteration of this chart. So the arrows sort of capture it. And then finally, last one, I've just put in this buyer beware, buyer be bold. So do you have to, sell it all? No, but I mean, there are lots of things, whether it's a valuation that one could argue for, whether it's the fact that Warren Buffett is holding more cash than he's ever held, a man who's obviously proven himself to be quite astute at timing. Despite he's saying no timing, he held cash at the high. And guess what he did at the financial crisis low? What was he doing? He was selling puts, right? Goldman, he was bailing out Goldman Sachs and Morgan Stanley. He was the final. So he's very much a timer, despite him saying that he's not. And I think his judgment here is to buyer beware.
This makes sense to me, Dan. And this sort of, I think, dovetails nicely with exactly what we've been talking about when Carter just mentioned. There's a reason why the aforementioned Warren Buffett now has over $325 billion sitting on his balance sheet. That's up from, I think, 275 a couple months ago. It's because he sees exactly what Carter sees. And, this is one way to look at it. The other way, obviously, is that Buffett indicator that we talk about all the time. That's the Wilshire 5,000, which Carter will tell you there are not 5,000 stocks in it, oddly enough, but that's close enough for government work. But you take that market cap and divide it by GDP, and now we're either side of 202%. And I'll say it again, his sort of antenna goes up at about 130%. And this is historically, I think, the highest we've ever seen. So when you overlay that with Carter's chart, I mean, it's buyer beware. And it doesn't mean things can't go higher, but buyer beware, Dan.
Yeah, and it's one of those days where doesn't seem to be too many buyers or be wearing of much. I don't know if I can even say that, but if you get my drift here, well, I mean, it goes back to, okay, we thought NVIDIA might be able to take down mega cap tech. We have the Google news, but it just seems like money is flowing into the banks. If Amanda wants to pull up the BKX here, we had that huge one-day move after the election. We've consolidated really for 2 weeks at the upper end of that move, that closing day on November 6th. And here we are. It looks like we want to break out here. So there's lots of stuff going on here that just seems very, very bullish from a price action standpoint, but it seems a little bit divorced from some of the reality. If you think about what are some of the headwinds that we have going forward, it seems like every headline I see is about tariffs, and every sort of company in America seems to be worried about that, but the stock market investors are not particularly. Here's another area which, Carter, you won fast money last night. This is pretty astounding. I hadn't been looking at the MicroStrategy. They own, what do they own, Guy? $30 billion worth of Bitcoin. He raises money every time, Michael Saylor, he can to buy more Bitcoin. I mean, talk to me, Guy. Michael Saylor. He's been on our show, I think, probably 4 times over the years. I mean, there's very few shows that we do that gets more interest than when he's on, and he's just been a true believer as long as we've known him for 5 years.
He's putting his money where his mouth is, without question. Yes, I do know him. He's a brilliant man. You say what you want. I mean, I know there's one side of the equation thinks it's all the permutations and all the jockeying are suggestive of something that can sort of fall really bad or end really badly in terms of how they raise debt, buy Bitcoin, use all those different things, create convertible bonds. I mean, it's all very complicated, but it's all somewhat tenuous as well. But there's no denying the fact that regardless of how they've done it, they've accumulated that many Bitcoin on their balance sheet at the market cap that you just said. And, they've probably bought it at an average price either side of 47 or 48,000. So you can start to do that math. Now, the problem is, and I don't want to steal Carter's thunder, but I will for a second. If Amanda were to pull up a MicroStrategy chart over the last, let's call it 3 or 4 months, this was a $100 stock, give or take, in September. It traded north of $540 today. That is probably, over that same period of time, Bitcoin has probably gone up about 45% or so. So the question one has to ask themselves is, why are we seeing this levered type of moves? And what could potentially happen if Bitcoin were to go down 10%, which is probably what Carter's going to talk about now. So, Carter, I'm sorry to do that, but I just thought I'd bring it up.
Yeah, I mean, I don't know. I don't know anything about it. You know him or whatever. Is it an operating business? Do they sell things? They have revenues? I don't know. But what we do know is it's steep and uncorrected. I used a log chart to mute the rate of change for the note to clients. But you're talking about just in the past, 2 years, 15 to 500. And then, of course, from the August low, having gone up 5x, Bitcoin has doubled from its August low, and this is up 100 to 500. Unfilled gaps, it's got a lot of issues. My thinking is, and its relationship with its relationship with Bitcoin is also decoupled. Someone a client sent me something. What was it? It was that the one thesis is that the more expensive the stock gets, right, relative to Bitcoin, the more money they can raise, because they've been raising debt and equity to buy yet more Bitcoin, a flywheel effect. Now, when I heard that, I almost fell on the floor. I don't understand what that means, other than that sounds like,
well, it means it works until it doesn't. I mean,
exactly.
you're seeing today the last week is a great example of how this works. There's the other side of that mountain as well that I think, your notes suggest that we might be on the precipice of. I know Doug Cass put out earlier today that it was shorting MicroStrategies. That's before the stock sold off. So good for Doug and good for your note as well. But, this is, I don't want to use the term sort of house of cards, but just in terms of the math associated with it, given the move over the last couple months, Dan, it's exactly that.
Yeah, it's one of those things that I mean, it just kind of speaks to just this euphoria that we're saying that we see. We had this great conversation with Steve Quirk, who's the head of brokerage at Robinhood, the other day. We dropped it on the Tape podcast, and he made a really good point, just how investors on their platform, and they have 24 million funded accounts, right? And it's not the same platform that it was. Then people are thinking, they were YOLOing, options and meme stocks and cryptos and altcoins and all that sort of stuff a few years ago. I mean, they moved to where, if they see opportunity, right? If the stock market feels overly valued, they may move to some asset class, a different one or whatever. And so when I look at this, okay, that makes sense that they're piling into Bitcoin. They've had two big reasons this year to do it. The creation of a lot of those ETFs earlier in the year, right? And then obviously the idea of like deregulation. I think Gary Gensler is quitting today, and he's been somebody who has been a real opponent, right, to deregulation in the space. But what on earth makes sense that you would pay 3 times the NAV of the holding in this business when you can just go buy Bitcoin, you can go buy an ETF, you can go do whatever? But the problem is, and I think Doug said he's like dipping his toe in the water, it's a really expensive borrow. It's a really, volatile stock. There's no reason why it couldn't go up another 50%, right, Carter? There's nothing.
Sure. Yeah. What is the answer to that question that you were asking? Why are people doing it?
I don't know. I mean,
they're doing it because you're getting the moves you're seeing, right? I mean, they're
No,
doing
but
it
instead
for
of buying
this.
Bitcoin.
Well, I agree. I want to be crystal clear. I agree with everything you both just said, but the moves we've seen over the last a month and a half or so in MicroStrategy specifically, when you overlay it against Bitcoin, is exactly why they're doing it. It doesn't make mathematical sense. It doesn't make really investment thesis sense either, but it's playing out the way they want it to. Now, I will say this, this is by definition, it cannot last. Something will trigger the other side of this equation. I'm not smart enough to know what it is. Theoretically, it could be just a 10, 15% sell-off in Bitcoin or something else. But this is a tenuous move at best, in my opinion.
Yeah. All right, Carter, we really appreciate you being here. Great work as always. We'll see you probably on Fast Money tonight. All right, bud. See you.
Bye, guys.
Hey guys, so something else that seems a bit divorced from the price action in Bitcoin. Let's pull up Coinbase for a second here, right? This is a stock that, has had this great run. I think this is also not too different than the Robinhood customer that we talked about. This is a different company than it was in 2020 and 2021. I mean, the institutional kind of acumen that they have for custody and the like, so it's a very different company. Is it expensive? Sure. Is it one of the few games in town? Yeah, probably. So does it deserve a premium? No doubt about it. It's had this big run though. Listen, you could say that downtrend line is what it is. It's above that. You know what I mean? So now you have a little bit of support to the downside.
This is one, you talk about not wanting to chase and having to move your feet at some point. If there were ever a stock where you got to start to move your feet, I think it's this. We're approaching levels that we last saw, like many things, in the fall of 2021. Valuation, to your point, Dan, does not make a lot of sense. I don't see what the volume is today. Maybe you can pull it up for me. This is a stock that typically trades 16 million shares or so a day. My sense is you're going to see over the last couple of days, probably 3-4x of that. This is the sort of the deep end of the pool now. So, do we get to those November 2021 highs? Maybe. But again, this is one, it's not as I think severe, obviously, as MSTR, but it's in that same vein.
Yeah, to your point, it's traded 17.5 million shares already. One of the other things that we just got to hit this a little bit, and we probably should have last night on Fast Money as it was coming out. Look at this Snowflake, and I will say that a couple days ago on the market call, you said, I think you called it a bearish to bullish reversal. This was in front of earnings. Now, that's all fine and good. I saw the numbers that they reported. It looked good. I mean, their expectations were really low. You see what was going on with the chart. You highlighted the fact that, it was just picking its head up above the 150-day moving average. But for this stock to be up nearly 35% today, what does that say to you about investors? This is a $58 billion market cap company. I just want to give you some math because you and I have talked about this on a price to sales metric. Now, if Amanda can show us a 5-year, it trades at about 13 times, 175 times earnings. Now, all of that, think about what just happened to all of those valuation metrics with a 35% rally right there. And I know a lot of people go back and they look, well, in 21, after they went public, it did this, that, or the other thing. It was a different time. So are we going back to that time, Guy?
No, we're not. And I want to be clear. I mean, this is one where we looked at it. It looked to me like, excuse me, it was a bearish to bullish reversal. Did I think this would happen? No, probably not. We talked about potentially filling the gap that we created earlier this year at some point. I mean, it's starting to play out. Does it mean the fundamentals have changed? Absolutely not. Is it divorced from reality? Yeah, probably a little bit, but not nearly as much as it was a few years ago where it made absolutely no sense. But to specifically answer your question, you say, what are investors doing? I don't even know if it's investors anymore. I think so much of this is just computer machine generated orders. And if you don't run into sell orders, they take stocks to where they do find eventual sellers, which is sort of the marketplace that we find ourselves in. Doug Cass talks about this all the time. The mechanism of the market, I don't want to say is broken, it's changed. And that's something that David Einhorn said, I want to say earlier this year. He used the term broken. I'll use the term change, and you have to adapt to it. It doesn't mean that they have fixed the ills of this company. It doesn't mean it makes sense on valuation. All it means is, people come in or machines come in looking for areas to buy. And when they finally do find a seller, that's where it stops. And I think that's what we're seeing today.
Yeah, no doubt. I mean, just my 2 cents on the kind of broken mechanics of the markets. And you and I have been doing this a long time. Doug's been doing it longer. When you think about Doug and the work that he does, he's, I wouldn't say he's an active trader. He's a guy who puts on intermediate term sort of positioning. He likes to look at sentiment. I hope I'm quoting him accurately. I read his stuff every day, so I get a sense he's very transparent, so he has the ability to move his feet, right? If you think about it, David Einhorn over at Greenlight, he's been doing this a long time. He's, a long-term investor. He builds big positions. And I think some of the frustration that you have is when you see these sorts of disconnects, if you're not particularly nimble, it can be really frustrating, right? On the long and the short side. We were talking yesterday, Target was down 21%. This comes 3 months after they guided up. The company guided up and now they're guiding down. So, I mean, some of those things are, really frustrating. When these companies that, you take a position in and they have no visibility or they're very poor at forecasting their own business. That's when you get these sorts of gaps and, it makes it hard to kind of stay in the game, Guy.
Well, I mean, okay, I'm not looking to bash Target. Although last night on the show, I said, I'm not looking to make any friends here. I'll call it what it is. They're just, and I didn't use the term shitty because I was on television. I'll use the term here. They're just a poor operator. And I said that flat out. And remember, they gave guidance, I don't know what it was, a month and a half or so ago. I don't know what's changed, but clearly something did. So, Karen talks about it all the time. I sort of agree with her, but if you don't have visibility, don't give guidance. And we can agree to disagree on that one, but you see what happens. So in terms of Target, listen, I'll say this again. As much as it is an indication on what the consumer is doing, it's not an indictment of the consumer. It's an indictment on Target. And that's what we're seeing. And I think yesterday, I want to say it was Deutsche Bank, don't at me if I'm wrong, they lowered their price target to 105. And if you do a longer term chart, I mean, that's probably where it's going. I mean, they are just zigging when they should zag. They have some problems here. And you can see what I'm talking about in terms of that level, Dan.
Yeah, I just want to say one thing, and Karen and I have been going back and forth on this on Fast Money, I think for 10 years, when she says that I don't think companies should give guidance. That is the talking point of a CEO or a CFO or somebody who doesn't want to be pegged every 3 months to what Wall Street or investors are expecting. I think about it the opposite way. If you're an investor, you should demand as much transparency as you can get. You are an equity holder of that company. You are basically, by every share that you buy, you're giving an endorsement to that management and their strategy. And why would you expect anything less? So that is the norm. And so that brings me back to, I don't think that's ever changing. If you look at the way information and access to, tools to trade and to invest has been democratized over the last 10, 15 years, why would there ever be a reason, easy for me to say, why you would take back that norm that has existed in the markets for decades?
No, it's fair enough. I listen, I'm not disagreeing with you. If you have visibility and you think you can give clear guidance, you should absolutely do it. I mean, Target gave guidance, and a month or so later, whenever it is, it proved to be wrong. I mean, there's certain companies that I think have that visibility. I think there are other companies that think they do, but clearly don't. So what's, I guess, the pushback, and I don't want to get bogged down in this, what's better, to give guidance that people take as sort of gospel, buy the stock on the back of, only for a month later the stock to go down 20% in one day?
I have an easy answer, is that those managements who don't deliver, then they basically lose credibility. And that is a big knock on owning that stock. And, people used to say this about GE. Remember back in the day how Jack Welch would manage their earnings. So they never had big beats and they never had big, misses, and they would beat by a penny every quarter. Now that worked until it didn't, but it worked for decades. You know what I mean?
It worked until he left. And then people realized that, they were just basically adjusting real estate holdings to beat it by a penny. And there was some, again, if you go back and really look, Jeff Immelt wasn't really the problem with GE. The problems with GEs were created years and years prior. And it's a good conversation to have. And I see both sides of the argument, but we're probably getting bogged down.
No, listen, I actually think people like this. To me, Guy, it's like every story, every amazing story. Cisco used to do the same thing. Remember John Chambers? Like they basically had this ability to kind of just put it up until they weren't, until November of 2007. But that's every story that has ever existed in the market. When I started in the business, Intel was the monster. Intel was the gold standard of tech stocks. Now it can't get out of its own way, and it's been that way for a decade. And so they lost visibility. They misexecuted. They did a whole host of things. They've had 5 CEOs in the last 15 years or so. So, to me, I think credibility of management is very important. And I think that's why those data points are, increasingly important, especially as you kind of take the human element out of a lot of investing, Guy.
Fair enough. Let's take a look at some questions. We just opined. So Ramesh B, if you throw the question up, I just want to make a point of saying we did address it in terms of Snowflake. Hopefully, Ramesh, we answered the question for you. This is from Situation Room. Has IWM finally made the turn? Where might we get the buy signal? So throw up the IWM. It looks as though, we're right there. And what's happening is it's all predicated on what Dan has been talking about for a while, this move in banks. So I don't think we've made the turn yet. And if you go back again, if you do a longer term chart, you'll see what I'm looking at in terms of these levels being pretty big resistance. I think we make the turn, and I'll try to get an exact number for you. So bear with me. I'm sorry, I'm just typing. But if we can close above, here you go, a close above 245, let's say, I think that would validate the turn, in my opinion. So that's what I'm looking at for the IWM, Dan.
Yeah, the one thing I'll say is I am just unimpressed with the performance since the election. When you think about some of the other sectors, the way that they've rallied, you think about the way the KRE has acted, that's the regional bank index. And to your point, there's a bunch of small cap stocks in this sort of thing. It almost filled in that whole gap on November 6th, right? And so here we are, we're still below it. The S&P, the NASDAQ are about to make new highs. So I just don't find the Russell too interesting. Who did we have on? We had a strategist a couple weeks ago. I don't know if it was Marco.
It was Brian Belsky.
Oh yeah, Belsky was talking about small caps, and he basically was very dismissive. He just thought they're basically a useless sort of thing to focus too much energy on.
Well, the way it's constructed, but it's more thematic. But yes, 100%. I think the idea, we've talked about it. I don't think it's the best constructed ETF, but
right.
it also speaks to, people's view of the economy. And theoretically, if small cap stocks are doing well, it should be predicated on a strong economy. So I totally get it. Here's a good one. I like this. This is from JS. Which is higher, guys, Bitcoin allocation or Blutarski's GPA? His GPA was 0.00. So my Bitcoin allocation equals that of Blutarski's GPA. And I'll be honest with you. I mean, I've said it all the time. I don't really get it. I don't understand it. I've tried to understand it. I've read books about it. It's not intuitive to me. It doesn't mean it's not viable. It just doesn't mean it makes sense to me, Dan.
By the way, one of my favorite movie lines of almost every movie that I've seen, I've been on this earth for 52 years. I probably started watching like adult movies. I think 1977 guy was my first one with like Star Wars. Maybe I saw the Jaws after
I
that.
love Star Wars.
No, you don't. The line by Dean Warmer, and who is the kid? Fat, drunk, and stupid.
Fat, drunk, and stupid is no way to go through life, son. Yep.
Yeah, and you know what's funny? You do this thing all the time. You did it with the Wizard of Oz the other day. You said, the Wicked Witch, she wasn't the villain. You said it was the wizard. Like, Dean Warmer was not the villain in Animal House. Like, let's be honest, right? Like,
no, Dean Warmer was just trying to run a school, man.
Yeah.
There were enough villains to go around.
What about the scene when at the very end where Belushi's given that speech in the fraternity house? Was it over when the Germans bombed Pearl Harbor?
Germans.
That's actually, that could be my second favorite line ever.
You couldn't make that movie today, for better or for worse, but that's neither here nor there. This is for you, from Mark Meissner, who's here every day. Thank you, Mark. And I'm reading. I apologize. Well, I'll read from here. Can you give your input on a call spread that goes out 2 or 3 months and the stock hits the short call strike early within weeks? What do you hope to maximize? So we've talked about this a number of times in terms of, you could put on a call spread, you can leg into a call spread, and I think this is sort of talking to that.
Yeah, so this is actually a really good question about how to manage an options trade, and I love that Guy always does that. So oftentimes I will lay out a call spread, buying a near the money call, selling an out of the money call. We don't like to sell calls that are too cheap, right? Like, so usually I'm looking for something that is maybe a 15 delta. What does that mean? That means it's got about a 15% probability of being in the money. So when I put a call spread in, I'm actually targeting the level in which I want the stock or the underlying to go to. So your question specifically is that if you get to that short strike and you have a lot of time, well, there is an opportunity cost, right, of leaving that short call on. So it depends what your catalysts are. It depends what your time horizon is. You got to remember, you can always cover that short call, and maybe you roll up the long call a little bit. So you're taking a loss on the short call, but you're locking in a part of the gain in that longer, on the long one. And then you just kind of define your risk and maybe you do another call spread, or maybe you do a call.
I got one more for you, Dan, and I don't know the answer to this, so I apologize. This is from Edward Morgan. Help guys with my memory. What's the equal weight small caps Carter talked about, not the IWM? I don't know the answer, and I'm not suggesting you may. So I'm not looking to see you up here.
I talk for like 10 seconds, and I'll go to the perplexity. And
so it's interesting. Doug and I'll go to this comment from Doug. Bear with me a second on that. Doug just talked about this incoming president's fascination with Bitcoin on the back of talking about the want for a weaker dollar, stronger dollar. I mean, there's something that's got to give here with the US dollar and Bitcoin that I don't think the market fully comprehends yet. And I think to a certain extent, Japan's yields are going higher while their currency is going lower. There's a problem there. And there could be a scenario where our yields start to go higher and our currency starts to weaken, which is not a good thing. I haven't figured out how it happens, but it's happening in Japan. Go ahead, Dan.
Yeah, Amanda did it before I could get it from the perplexity. It's SMID. SMID. I want to say one thing before we get out of here, Guy. I was at I'm not going to name names here, but I was at a meeting in the last week with a bunch of investors, a bunch of bankers, and a bunch of founders of tech founders. And there was a very prominent person in this group who was kind of holding court, put the thing together. And it was interesting because, you and I, we're focused on the markets. We're staring at the markets. We have to look at all these other inputs. I think Doug, and why I'm thinking about this is kind of Doug's tweet that you just read, right? So like, here's an issue, or here's a scenario where markets have been moving all over the place for the last 2.5 weeks based on an outcome of a political event. Right. And, this person who made this point is that, okay, we had this, surprising outcome in our election. And it seems that a lot of Americans, and thankfully, are pretty calm about everything. Right. If you were on the other side of this, administration that's coming in, you want it to work out, not the bad things, you know what I mean? But you want the things that keeps our country secure. You want the economy to continue to grow, all those sorts of things, right? Nobody wants bad outcomes. But, it's interesting that this person who's been all around the world in the capacity in which he does, he talks to a lot of business people, a lot of politicians. The whole world is very nervous. The whole world is nervous about this transition. And I think that's really interesting. And I don't think there's anything priced into our markets. And I'm not trying to fearmonger here. It was just a very sobering, sort of conversation. And so we started this thing by saying that Russia launched an ICBM into Ukraine. ICBMs are used to put nuclear warheads on and send them overseas because they have a long range. That's kind of the point. And so after Russia just changed their nuclear doctrine, and then a week later they send an ICBM, you don't have to be a political science major to put that together, what they're trying to intimate. So, and I'm not, again, I certainly hope none of this happens, but it's just weird that people are YOLOing the crap out of Snowflake and MicroStrategy and all this other stuff. And people just don't give a shit about anything else.
No, you're right. And the world is nervous. And I think I'm not playing devil's advocate because I agree with you, but the optimists will say that's the exact reason they wanted to elect former president, now President-elect Trump in the first place, to make the world nervous, because that works to our benefit. And I'm not suggesting it's right or wrong, but there are two sides to this. Yeah. Now, you're talking about launching. If you had told me a week ago, given the run the market had, that you would have the headline that we led with, and you say, okay, where's the VIX? I would have said 25, maybe 30, S&P down 100 handles, gold up $50, bond yields down significantly in the form of a flight to quality. Not that it would make sense fundamentally, but all those things, none of it's happening. And so here we are. But you know what? That's neither here nor there, because we have something to announce. We talked about it yesterday. Throw the slide up, December 10th. We're excited about this, Dan, along with our good friends at FactSet, transforming the financial landscape, AI's role in revolutionizing technology and workflows. This is something we talked about at their conference a year or so ago-ish, and this is something we're going to talk about on December 10th.
Yeah, and just really quickly, at a time where people are kind of trying to figure out what are the use cases for AI, whether it's been machine learning evolving, into some of this other technology that's really caught, I think, the world by storm over the last couple of years. I mean, financial institutions, and specifically a data company like FactSet, you're getting real benefits from deploying this technology. So we're going to spend some time thinking about that and really what it means for, we use FactSet every day, and we have been for a very long time. What are some of the new benefits of using some generative AI tools that have been kind of bolted on to some of the processes that we use? So to me, I'm really looking forward to this also, Guy.
Looking forward to it. We are going to have our podcast dropping tomorrow. We had a conversation with Terry Duffy, the CEO of CME Group. It was a great conversation we had earlier this week when we were in Naples, Florida. Danny's going to join us for the A block of that conversation, which will probably talk around some of the things that we didn't mention on Market Call this week, but we look forward to it, Dan, Nathan.
Yeah, we do. Thanks, everyone, for being here. Go check out the On the Tape podcast. Go subscribe to the Market Matrix that drops every day right after the close, summarizing some of the most important stories in the markets. And we'll see them all on Monday, Guy, for the Market Call again.